On April 28th, Canadians head to the polls. And with ongoing trade tensions and market swings, traders across Canada might be paying close attention. Which policy areas are in focus this election? If you've been tuning into the news or even just scrolling through social media, you've probably heard a few hot topics dominating this election. Cost of living, housing affordability, productivity, social programs, defense spending, and of course, the trade war. But these aren't just buzzwords. They have the power to move markets. So, what could this mean for your investments? Let's zoom out for a sec. Do elections usually impact the Canadian stock market? Over the long term, Canadian stocks have gone up regardless of who's in power. In fact, research suggests that in Canada, the political party that is elected has little influence on its equities market. Since 1997, the S&P/TSX Composite Index produced an annualized return of roughly 10% per year. Yep, you heard that right. Through over 15 elections and plenty of economic curveballs, the Canadian market has continued to grow. Sure, elections can stir up short-term volatility, but historically, they haven't derailed the market's long-term growth. How could TSX sector insights help traders prepare? Instead, traders might consider how policy changes can ripple across the economy, and more specifically, which sectors could be affected. Let's look at the S&P/TSX Composite. It tracks around 200 of Canada's largest companies, and as of April 14, 2025, just 5 sectors make up over 80% of the entire index. Financials, like the Canadian banks, make up nearly 1/3. Energy, represented by companies such as Enbridge and Suncor, make up close to 20%. Then you've got materials, industrials, and technology. Each sit between 10% and 13%, with names like Barrick Gold, CN Rail, and Shopify. Now that we have an idea of what the economy is centered around, you can start to connect the dots. First, identify the policy. Are we talking tax cuts, increased government incentives, and so on? Next, trace the impact to a specific sector. For example, if there's a big push for green energy or emission targets, look for how that might affect the energy sector. Will this shift supply and demand? Will it raise costs for suppliers, customers, a mix of both? And context matters. The bigger the sector, the more sway and influence on the overall market. Finally, connect the dots. Once you've zeroed in on a sector, check which companies might be impacted most. Who can benefit? Who might be at risk? How can TD WebBroker support traders? Not sure where to start? Tools like the Screeners tool on WebBroker can help. Choose exactly what you're looking for and it'll scan the market for what matches. Let's say you're watching energy policy. Hop into WebBroker and head over to the Tools section and click Screeners. Start by selecting Canada. Then filter by sector and industry and select Energy. And voila! You've got a curated list of Canadian energy stocks to explore further. At the end of the day, elections come and go, but Canada's economy and the companies driving it have shown resilience through it all. By understanding which policies might impact which sectors, you're not just along for the ride, you're choosing your seat. So, the next time a big policy hits the headlines, you'll know where to look. Are you looking for more tips on how to navigate this current market? Make sure to subscribe so you don't miss a video.